Hi team, Adam Thompson here from My Mortgage. Today talking about why I personally don't believe in splitting your fixed rates. Look, it's a bit of a controversial topic. It was something that was really pushed a few years ago. I even remember seeing pamphlets in one of the banks that said, look, split some of your fixed onto 1 year, some 2 years, some 3 years, etc. And you'll remove the risk of rate fluctuations and you'll just get an even keel. Well, that's all good and well, but as we sit here in the middle of 2020, rates are down at sort of nearly 2.5%, and I've got people who have got some rates coming off and then some other rates where they've got a couple of years remaining that are up at 4 or 5%, and they're sort of going, why did I split my fixed rates? I was told it was a good thing to do. Really what you're achieving by splitting your fixed rates off a lot of different terms is you're just not exposing yourself to that risk of the market every year or every 2 years when your fixed rate comes up. You're splitting that risk over a longer period of time. That means in theory you're not going to experience high highs all at once. You're not going to go from a low rate to a high rate. But at the same time you're not also going to experience the lows. And for someone who say fixed for 12 months ago, they're coming into absolute lows now, which is awesome. It's worked out really well. If the rates are shot up by a couple of percent, then obviously they'd be going into highs. But the problem is it's really general advice and it's just throwing out there as a way to sort of mitigate risk. But the best way to mitigate risk is to make a plan. What can you afford? What does your budget say you can afford to pay on your mortgage? Pay that amount. Don't just pay the minimum. Pay what your budget believes you can afford. And then if the rate fluctuates a little bit, you can actually still be paying the amount that you can afford to pay. It might just be a little bit more principal, a little bit more interest and a little less principal, but you'll still be able to maintain it. So it's just a bit of planning, and I think why I don't like splitting your rates is I think it's a lazy approach to trying to minimise your risk, whereas I think spending a little bit of time talking to someone like myself or our team about what's going to fit your situation, setting a budget and setting a plan and some goals about how you're going to reduce that debt means that you can take a fixed rate that's right for you. So that might be a 12-month fix, it might be a 5-year fixed, but it's all down to what's right for your situation with a consideration to what's in the market and of course getting the best deal. So look, get in touch with us, we'd love to talk to you. We think there's just a better way than splitting your rates across a number of different fixed terms.